Now, let's start tonight with commodities, specifically oil, black gold. Good stuff, eh? Crude oil prices fell by over 6% in early trade and then regained some of that ground on Monday after oil producers failed to reach an agreement to freeze production. Now, U.S. crude futures were down under $40 a barrel to $37.61, down nearly 7% early on in trade. Brent futures fell by a similar margin, down to $41.23 a barrel. Now, efforts to reach a consensus between OPEC and non-OPEC producers to freeze or at least cap output at January levels in order to support prices completely failed after Iran stayed away from the weekend meeting of 18 oil-producing nations. Saudi Arabia, on its part, was insisting that all OPEC members, including Iran, implement the deal. Oil prices, as you will recall, hit a 12-year low in January, under $30 a barrel, but they had risen above $40 in recent days. Analysts say the weekend setback means prices may remain lower in the longer run. But the recent cutbacks in investment and, of course, American supply may help to rebalance supply and demand overall.
But for today, recognizing the fact that fundamentals changed from the first meeting, we debated the freeze from all aspects and what could that result. And the meeting concluded that we all need time for further consultation, and from now till June meeting in OPEC, all participating countries will consult among themselves and with others.
Now, in terms of timelines, remember the next meeting on the 2nd of June, so they've got about a quarter or so to actually work those kinks out, if they can. In the meantime, let's jump over to Kuwait. Oil workers there protesting over government-proposed cutbacks as the country is grappling with a prolonged slump in global crude oil prices. Thousands of workers demonstrated in the town of Ahmadi, where the state-run Kuwaiti oil company has its headquarters. Workers opted to go on strike after government officials failed to meet unions' demands in order to keep workers' salaries and benefits untouched from government cutbacks. Now, Kuwait is the latest country in OPEC to introduce austerity measures, as oil prices are hovering around $40 a barrel, and that's compared to over $100 a barrel in June 2014. Angola, Nigeria, Venezuela have all cut budgets, and they're borrowing heavily in order to prop up what little reserves and revenue streams they do have. Now let's head over live to Stephanie Freed. She's in Kuwait City with a follow-up to, of course, that very dramatic meeting in Doha on Sunday. Stephanie, what's the reaction to Sunday's event from the other big OPEC producers in the region, particularly Iran?
Well, certainly, of course, disappointment. I mean, the analysts that I was speaking with, and of course it's common knowledge that the OPEC ministers and also the delegates, the non-OPEC members, the oil-producing country delegates who were there, had come up with a draft agreement a day prior to meeting on Sunday. And so there was the expectation, everyone that I spoke with, including one of the OPEC ministers, expected an outcome of an agreement. So when it didn't happen, of course, there was disappointment. Iran has been silent on the matter for the most part. The intention there is to continue producing, as was clear from the lack of agreement. And Iran wasn't represented at the talks on Sunday. So again, it was a big disappointment. However, the sides also seem to be fairly certain that this won't be a devastating blow to the economies, to oil production, to the markets. And so that's the overall sentiment coming out of that lack of a deal on Sunday.
Indeed. We've seen a fairly positive reaction, especially given the rebound in oil prices. But with oil at around $40 a barrel, what's the average break-even price for Gulf states? Should we expect to see a lot more push for more borrowing in order to fund state budgets across the region and more diversification away from oil?
Well, analysts seem to be saying after the opening of Monday's markets and not a drastic drop in prices. Yes, there was a drop on the heels of this lack of agreement. However, there seems to be a consensus that we won't see a drop in prices below below the $30 per barrel mark, which we saw in January. This is what prompted this meeting. And that seems to be the consensus. Now again, another analyst I talked with talked about alternative energies, alternative breathing life into economies, and certainly we know that Russia's economy is hurting. Saudi Arabia has taken a hit. Venezuela is in a state of economic emergency. However, again, there seems to be a sense that things will eventually even out. It could take some time. However, yes, there will be belt tightening and some diversification, but for right now, we're not feeling a drastic drop or a bottoming out in prices on the heels of this lack of agreement.
Indeed. We'll leave it there for the time being. Thank you for the update. That's Stephanie Freed, live, of course, in Kuwait City.